At this time, I can't answer any timelines and any guidance on launch date or on the litigation. But I think we're just sharing, what's in our pipeline, and then we have an exciting product and some strengths we have FTF. So I think it's a great opportunity if we're able to pull it off as and when it happens. Okay.
Thank you. Thank you so much.
Okay. Yeah.
Thank you. And the next question is from the line of Omkar Kamatekar from Bonanza Portfolio. Please go ahead. Hello, Omkar sir. Hello, Omkar sir. The line for the current participant.
Hello.
Yes. Yeah,
hello?
Please go ahead.
Yeah.
Yes,
So my first question is with respect to capex. Approximately, what is the amount of capex that we have incurred in the current year, and what will be the steady state capex if we are going to incur in the next couple of years? Because we've added approximately 50% capex in the last 4 years, from 2,100 crores in FY19 to now, as of FY23, 57% capex has been, the gross block has increased. So is most of the capex done, or will still there be another round of capex?
It's always maintenance capex. I mean, just you have to replace things, and you're always buying some new instruments and just upgrading your plants. So far this year, we have spent for 9 months 282 crores in capex.
Okay.
So I think that's fair. It's not been large like in the earlier years, because earlier years we did a lot of capex. I mean, we built a lot of new facilities. We built a fresh facility in Vizag. We built the agrochemical facility, and we did significant expansion in our existing facilities. Right now, I think we're okay. I think we're comfortable. I don't see any large capexes. I think that's why you see the cash is increasing in the books, because we're not spending so much on capex here.
Correct. So my question was with respect to, the point was, because of this increased capex, our fixed asset turnover, gross block to turnover had gone down, and we'll be close to 1 by the end of this year, FY24, close to 4,000 crores of turnover. So we'll be slightly above 1. Historically, before the round of capex, we were above 1.3, 1.4. So would those be the levels that we'll be reaching? So what will be the maturity time for for these capacities to reach optimal levels? So we might see 1.4, 1.5 times the gross block turnovers.
I mean, I think we are running optimally. I think because a lot of our investments are doing with things that we're trying to launch 7-8 years ahead of time. I mean, if you look at our business, I mean, we're working on stuff which is like going to happen 7-8. I mean, for example, we're working on oligopeptides. I'll give you an example. We did a significant capex for the oligopeptide block, and hopefully we'll get a filing through in the next 12 months. So what will be the payoff on an oligopeptide? Maybe 5 or 7, 8 years away. So it's a treadmill. I mean, you can't think of it like that I've done something and I have to see return tomorrow. Pharmaceuticals is like everything that you do, you have to wait 7, 8 years, 9 years for things to happen. So it's a cycle. What you make today, and then you invest, and then you go for the next cycle. So I think that's how. I don't know if I've answered to your satisfaction, but I think that's how you want to think of it. Yeah.
Yes, understood. No, I got the gist of it. And finally, with respect to the free cash flow, what was the free cash flow generation for the period, for the 9 months or 6 months, whatever, if you could share, free cash flow?
Free cash flow, I mean, I think we already said, our PAT is about 1,000. So if you want to say, you want an EBITDA, or you want how do you want the number?
Free cash flow. So that would be operating cash flows minus the capex for the year. So if it is available, or
I think.
Yes.
I don't have everything on hand. What I have to tell you, I mean, 200, and I already told you what the capex was. Just give me a minute. So we're about, from an EBITDA perspective, YTD is about 1340, and capex is 282. And
maybe I'll back calculate, or I could take it out.
Actually, the numbers are in public domain. You can work it out. 282 is the capex, and then what was the EBITDA, Rajesh? 1340. 1340. Then you do the taxation, and then dividend. I think we paid this year, I think almost 9.5 rupees. So I think, is it 9.5? I think about 9.5 so far. I think 9 to 9.5. I don't recollect what. Yeah, around there. So
Okay.
So that's broadly those numbers. About 15% dividend we have paid. Yeah. Okay. Thank you. Next caller, please.
Thank you. Ladies and gentlemen, please press star and 1 to ask question. The next question is from the line of Shyam from Ladder Up Finance Limited. Please go ahead.
Oh, hello, sir. Thank you for the opportunity. My first question is with respect to the revenue from the US. So the revenue is in line with what we are doing in previous quarters and year on year, or it has grown or declined? And the revenue from Revlimid, the tailwind that we have received from it.
Could you rephrase that question? I didn't understand what your question is. Can you rephrase that and say it again, please? I didn't understand what you said.
Sure, sir. So I just want to know that how was our revenue in terms of US, So it was in line with previous quarters, and or it has declined or grown?
I think if your question is on a year-on-year basis, we have done better than what we did last year in the US, and it is driven by obviously Revlimid and other products that we have. If the question is, are we better than last year? Yes, absolutely correct. We compare our 9 months for last year, and 9 months this year, I think we've definitely done much better than what we did. I think our last year profitability for the whole year was 715 crores. This year we have done 1,000 crores profit for 9 months. So we're definitely doing much better. Does that answer your question?
This was actually
lumpiness that happens because of how the sale is done for different products.
Correct.
So it's very difficult to, if you say compare it with last quarter, this quarter, then it becomes very difficult to compare. You got to take a more multiple quarter view on a year-on-year basis, then you can see a better trend. I think to trend on a Q-on-Q basis is difficult for our type of company.
Okay, sir.
Okay.
And sir, any development in our FTFs coming forward? Any specific molecules?
The stated goal is, we have about 3 or 4 smart FTFs. We want to take it to 6 or 7 in the next 2 years. I'm hoping, again, it all subject to how our execution and how everything works, that we'll be able to pull off another 3 or 4 very smart FTFs, which can give you more consistency in our earnings. Yeah.
Okay, sir. Thank you so much.
Thank you so much. Next caller, please.
Thank you. And the next question is from the line of Sayan Mukherjee from Nomura. Please go ahead.
Yeah, hi. Just a small clarification here. I mean, for semaglutide, is it a partnered product or you have your own filing and you will sort of have the 100% of the economics here?
No, we won't have the 100% of the economics. It is partnered and is with Mylan.
Okay. Thank you.
Thank you. And the next question is from the line of Purvi from Kotak Securities. Please go ahead.
Yeah, thank you. So my question is in regards to the Red Sea crisis. So we've been hearing that the freight costs have escalated a lot. So are we experiencing any issues or can this be a worry over the next 1 or 2 quarters? That's one. And the other one is on the raw material front, that if you could just give us a number as to how much is our dependence on China for the raw material. And as we know that there's a deflation situation that's going on there. So how do we see this also having an impact on the raw material prices over the next 2 or 3 quarters? Thank you.
I think overall, the freight rates have gone up, Purvi. I think for what I understood in our conversation with my supply chain head, I think there's been a 50 to 60% increase in the freight rates, and even the airline freights have also gone up dramatically. So there's a lot of disruption that's happening in the supply chain. Having said that, I think we don't see any supply challenges. Things have been fairly stable. I think at least our key products, I think we're able to manage reasonably well. But to answer your question, yes, there's been a significant disruption in the supply chain because of the Red Sea issue. And regarding China and all, we see a lot of stability in the raw material pricing as of now from China. I think from what I understand, I think things have been fairly stable. Now we have to see what will happen because of what's happening. But as of now, I think things have been fairly stable.
So just an ancillary to this as to how much is the inventory for the raw material that we usually carry?
Right now, my closing inventory for Concall is 600 and... Just give me a second, no? I just let me reach for that paper and come back to you.
No worries. Also, is it that, can I...
675 crores is the total inventory of the company as of today. As of this 31st March 2023. Yeah.
So just wanted to allude to Red Sea crisis situation. What is the kind of impact that you can see on the margins that can come in?
What do you see in the margins? There is some increase in raw material prices, and there's some delays in delivery, and there's overall general freight cost increase. So your logistics cost, other expenses have gone up dramatically.
Right.
But our portfolio relatively is less affected because our portfolio is a very high value portfolio, and a lot of the stuff we send by air, and it's all small volumes. So the impact that you'll probably see on our balance sheet will be not as significant, maybe compared to a company whose portfolio is more high volume and low value. I think the impact will be much more. But having said that, I mean, our impact, there is an impact, of course, you can't run away from it, but relatively the impact is less on a firm like ours. Yeah. Okay?
Okay. Yes, sir. Okay. Thank you and all the best.
Thank you, Sam. Next caller, please. Yeah.
Thank you. We would like to remind participants that you may press star and 1 to ask questions. The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
Thanks. Rajiv, on agrochem now, how are you thinking about contribution of this piece, over the next 2-3 years to the overall business?
I have some very exciting launches, a lot of first-time generics lined up in the next 12 months, subject to how litigation is going to be. I think it's a very good business. I believe that, it's right now, this year we may end around 150 to 160, depending on how things go. Little lower than we thought, but I think we still did very well for someone who's completely new in that business. This business has the potential to go to 300 to 400 crores brand, and there's a lot of brand loyalty from farmers once you deliver a very high quality product. We're doing a lot of, ad campaigns, and I don't know if you've seen some of our regional channels. I mean, we run ads regularly, especially in Telugu and Marathi, I think, which are big agrarian states, Maharashtra and the Telugu states of Andhra Pradesh and Telangana. We have done strong agrarian campaigns in the regional channels. So to bring consumer to buy our products. So I think we're doing well. I think it's a very exciting business, and I think right now it looks. I mean, we're not making so much money in that business at this time. I think once we have a lot of high cost inventory that we are selling off, but I think once the raw material prices stabilize and we're able to establish our brand, I think it's going to be as interesting as like a branded generic piece in India. So I think that's my vision and my view of the business.
And how important a role you think exports will start playing in this business as we go forward?
Exports also will be exciting, but exports won't kick in for the next 2-3 years. And I think some markets are opening up in the next 12 months, but I think the major markets will open in the next 2-3 years. Overall, it will be a counterweight. I think our expectation is that, but our core strategy will be driven by the India branded business. Exports may contribute about 30%, but the India brand business is where I think we see a value. We see this business can, scale up to 400 to 500 crores if we include export too. But it'll probably play out in the next 3 to 4 years, subject to, our ability to launch these products and able to be there in the first wave of market formation. I think these are the two most important things in this business, or any business for that matter, right? Just like generics and pharma, you need to be in the first wave, otherwise you don't make money.
Right.
Okay.
And secondly, on your, you've made taken a partial stake in the Singapore-based entity. So when you are doing these partial stake sort of buyouts in some of these companies, what is the thought process behind these?
I mean, it's like a strategic, investment. I think like a few minutes ago, I think one of the gentlemen asked me about the CAR T therapy. CAR T is something that, it's a skill set I don't have internally, right? So I think, so there we, invest so that we can get a see-through on how that business goes, and then invest with the promoter and see, to hopefully, bring a successful product in the market. So generally, these are all strategic so that we learn more about that particular business where we are not present. That one, we invested a little while ago. It's actually a very small investment because we had a clause which protected the anti-dilution clause on the valuation. That's the reason why the stake has gone up. But otherwise, it's actually a 2-3% investment. But actually, it went up to 7 because of the dilution protection. But usually, the value that comes from these assets are typically, if they give you a manufacturing advantage, or they give you a technology platform that you're not present in. I think that's or they give you a portfolio that you don't have internally. I think that's how you want to think about these assets.
And last one, in your what's been your overall assessment, if you can, on how the competitive dynamics or the pricing dynamics, or in general the market dynamics in lenalidomide has really played out over the last 2 years since it's been around?
I think we've done well, and I think there's been significant erosion, but also we have done well. I think we're happy where we are, and I think we have to see how the future holds. I think that's how I want to look at it.
And if you can please squeeze in that, is there any other geography where this could be an opportunity? Lenalidomide is an opportunity for us, barring US, where we're doing right now?
We do well in Canada. So Canada is, and we launched this in Australia too. And I think we're looking at 1 or 2 other ROW markets. But I think these are the key markets that we are present at this time.
Thank you so much.
Okay, thank you. And so next caller, please.
Thank you. And the next question is from the line of Somil Shah from Paras Investments. Please go ahead.
Hi. Sir, even after giving such a good performance for last 2 years, but still Street is not giving us the desired valuation to our company. And so it seems it's mainly because of dependency on one particular product, Revlimid. So, can you please give your thoughts that post Jan 26, once this product is open for all, how shall we look at Revlimid numbers? So, just your thoughts since you are in the business since long.
Okay. You asked me a very difficult question, so I'm trying to be as diplomatic as I can, yeah. I think, my sense of the business, I can answer like this, okay? So every company goes through a cycle where you make money on one product and it falls away. And I think the way you need to judge a company is what pipeline do you have and what's going to be the next big product. See, for example, if you look at our history, right? We made money on Tamiflu. It held up earnings for many years. Almost 3-4 years it held up. Now it's fallen away. The way the generic business works is there's always that 1 or 2 products which always will contribute, a good amount of profit, and it'll fall away because you're in the first wave, you'll make money and then falls away. Then you have to keep replacing it with a newer product which gives you that same amount of margin. And I will challenge you, that if you look at any of the leading pharma companies today, there'll always be that 1 or 2 products which will always give you that extra, earnings compared to the core portfolio. It's true for us, it's true for everyone, and that's how we want to look at it. And to answer your question directly, you just have to judge it on the pipeline. Honestly, that's all. All I can do is tell you this is what we are filing, and we believe that these will come. And whenever they come, there'll be a reasonable upside. That's how we have to look at it. And just have to judge the company by saying, what else are you going to file? In this year, will you deliver another 1 or 2 interesting filings so that you bring about more consistency? But that's the nature of the generic business. You have to assume that when you enter something where you're the only generic, you'll make slightly higher profit, but eventually it all falls away. So I think, but that's true of every molecule. There's no difference. Yeah.
Correct. And any big launch, similar to this particular product, are you expecting in 1 or 2 years? Similar to Revlimid?
1 or 2 will be difficult to judge. But I think, our investment position is very clear. I think we have a lot of interesting pipeline. We have semaglutide, we have olaparib.
I just want to add on that, Somesh, is
very important to look at the investor presentation where we highlight the sole first to file, right? These are the lists where the value that can come back to us would be much significantly higher. I mean, we've spoken the mid-size opportunities like Criprolus, and then Tracleer. So I think you just have to build this pipeline, and then you have to do a geographical spread so that you bring in more extension to your product portfolio in multiple markets. And that's how you make money in this business. And hopefully you're there in the first wave so that, you make more money. That's how I have to look at it. Okay?
That's it from my side. Thank you.
Okay, then.
And
Thanks.
so once again, congratulations on a very good numbers. Yeah.
Okay. Thank you.
Thank you. And the next question is from the line of Viraj from MoneyGrow India. Please go ahead.
Hi, Rajiv.
Yeah.
Given the cash flows on your books and the high cash flow generation in your business, despite the targeted acquisition, do you think you could see some corporate actions such as a buyback down the line? Because I think the street, having followed your company and business model for a long time, I think the street is massively undervaluing you, probably as the cheapest mid-cap stock for the metrics that you deliver on your business model.
I mean, as of now, we're looking at it. I mean, I've not made up my mind. I think I'm preserving all the money. Hopefully, we're able to deploy it for an acquisition. I think we're giving a reasonable amount of dividend. We've done a buyback in the past. We've done it, and I think recently only we've done a buyback. So I think, as of now, we're looking at all options. I think we have to see how things go. We'll see how the year goes, Viraj. I think, let's see how 24 goes. And I think we have more cash and we don't have any smart ideas on how to deploy it, then certainly I think we can consider. I think all options are open. But I'll consider, we are considering every option at this time.
Fantastic. The second question is, there was a spike in earnings in the September quarter. Was there an anomaly then? Sorry, I'm just catching up.
No, I think, the earlier quarters were led by, I think we had reasonable contribution from Revlimid. Yeah, I think that's the reason why.
Okay, and that Revlimid has seen pricing pressure since then? Q2
I think we have seen lesser contribution from this quarter, and I think we're hoping that it will be higher contribution in the coming quarters.
Understood. All right.
Okay.
Thank you. All the best.
Thank you. Next call.
Thank you. And the next question is from the line of Omkar Kamatekar from Bonanza Portfolio. Please go ahead.
Hello. Thanks for the follow-up. Two clarifications. What is the percentage of R&D that R&D spends that we tend to do on an average basis? What is for this current year, and what are we plotting it for the years ahead?
I mean, it depends on the portfolio, and I think we strive to spend about, minimum about 6 to 8%, but sometimes some years it goes to 8 to 10%, depends on the year. But, exact number for this year, I don't have it on hand, so I can't answer that question, but I'll give you clarity, I think, in the next quarter.
And with respect to what is the contribution of Revlimid in the total revenue, is that available? What is the percentage that did not catch it before?
We're not doing that question. We're not answering.
Okay, no issues. And I have two questions. Firstly, whenever whatever acquisition that you are targeting, what is the metric and what is the thought process behind this acquisition? What are the key points that you are looking at? And secondly, what are the major risks that you foresee with respect to any market, that be it domestic or international, that could have a material impact on the operations or the outlook of the business? That's the two questions.
I mean, in terms of metric, in terms of return on capital, I have very high expectations. I think we usually look for higher teens or 20% is my expectation. I don't like doing 10-12% transactions. I'm not a big fan of those, but because my hurdle has been so high, it's been difficult to do transactions, but I think we shop and we're patient. In risk and all, I mean, the risk is, you can always have currency risk, obviously, and there's always, in our business, inspection risk is a big risk, and so I think these are the major factors that play a role. And pricing risk is always there. I think if you want to look at it, these are probably the 2-3 factors that play a big role.
Understood. With respect to the acquisition, what you said was with return on capital or the overall return on investment that you are speaking about?
Return on capital, I think that's what we target. But again, you can target a lot of things, but what you'll end up with is something else. But I think that's what we would want to target. Yeah.
So the targeted company should have at least 20% or more return on capital employed, and that should translate into our business.
Our investment should be such that will allow us to make that sort of return. I think that's how we like think about it. But I mean, you have to weigh it based on the situation. Yeah. Okay?
Understood.
Thank you. My last question now. So whoever the caller is, yeah.
Yes.
Thanks.
The next question is from the line of Shyam from Ladder Up Finance Limited. Please go ahead.
Sir, just a couple of follow-up questions. In terms of agrochemicals, what we are producing is similar to what PI Industries and Chambal Fertilizers are offering in the market, or what we are doing is something different from the domestic players?
My model is not same like PI. I can tell you that upfront. Our portfolio is generally a patent challenge portfolio, meaning we try to be the first generic of that particular molecule in India. So a lot of the portfolio that we have launched is in fact usually the first generic or the first wave of generic. Right. And our model is not to work with innovators. We always challenge patents and very aggressive challenges for patents. So it's slightly a different model. So it's not like theirs.
Okay, sir. So my second question with respect to rev limits, since we have increased quota in this year, so will we be spreading the quota over the quarters, or we will see the similar allocation of quota that we seen last calendar year?
I think it will be spread out, but again, I'll give you more color to it on May, I think, when the March numbers are there. So we'll have more clarity on how they're thinking about it. Because we are not selling this product, they are selling our product. So I think we'll have some conversation, and I think hopefully we'll get some guidance on where we're going with the product. Okay?
So how this quarter is going on for this product?
I think March is, we're launching our quota, so I think we are expecting that we should do well. Yes.
Okay. Thank you so much.
Again, thank you so much, everyone. I appreciate the time that you spend on interacting with us. And I think thank you and good day. Yeah. Right. Thank you all.
On behalf of
the questions and the details will be uploaded once they are available.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Yeah.